Hey guys, Omar here again with an update on the triangle. So, it depends on how you want to look at this. But there was our breakout. Now that would normally qualify as a good breakout of the triangle. The only thing I ended up seeing here that kind of made me hesitate, well, it was twofold. Number one, London was not open. That was the closing candle 2 hours before London opened. I also saw this bit of horizontal support and resistance may have been up a little higher there, which kept me out. Also, because our last daily leg was really in the down formation, I saw this as a good opportunity to just skip this trade. London was not open, and that's a much bigger factor. It's not that you can't take good trades before London opens, because I've seen it happen, but even the good breakouts that happen before London opens, there's no reason after London opens you can't also catch the same move. So I haven't seen there to be any reason to not, or to actually want to really take a trade before London open. I've seen it happen too much that after London opens it reverses. So we saw the breakout happen 2 hours before London, and that would have been a buy signal. We broke out of the triangle, and it would have been a winner to the tune of about 30 pips, 25 pips. So you could have cleaned up a 25 pip trade, no problem. This last bullish candle was right at the end of this candle, London opened. And here's the first 30 minutes of London open. Has reversed the majority of the move, and it looks like we're heading lower. So it is important to make sure that you understand what you're going to do, and you can see that even before the breakout happened, I had scrubbed the long trade. So now what I'm hoping happens is that we get the real breakout, and I have a nice move to show you, and we'll put a trade up on the board and track that. So we'll be back in a little bit. I'll be monitoring this through the London session, and of course into New York. And if we can get a good trade entry, remember, it's much better to be patient and wait for a move you feel confident about, that you have planned, rather than take it simply on a reflex. There are plenty of opportunities throughout the week. You're not going to miss anything by taking a break, but I can tell you that losers can come with a quickness, even with 60 pip stop, even with 70 pip stop. You can watch that trade go down the tubes in 30 minutes. So anyway, so we want good solid moves that we're confident about. I wasn't confident about the topside breakout as the reasons I mentioned, and so we'll see if we get the downside breakout now. Hey guys, Omar here. I just want to give you an update on the triangle we had created. This is now late in the New York session the following day, and as you can see, there was a bit of action, and the principle itself worked, but the timing was wrong. So let's do a quick review. We had our initial breakout here, the one that I said, nah, didn't really want it. It ended up, at best, so had you taken the breakout just based on that, at best you still made 33 pips with relatively very little drawdown. So there was the opportunity there. I didn't think it was a very good one. Now that I see it, in hindsight, that was really a trend line there that was being protected. And you can see, and this is what I'm talking about, gold breaks these breaks in legs. Like the breakouts are just so regular. So if we just look at that, it actually ended up being an interesting point of resistance later. But once we broke the area that we were looking for, which was the fib and the trend line, price continued on quite a bit. I would have not taken that trade. I went to bed because this was, let me just show you, this right here was 2 hours into New York. So 3 hours into the New York session. I find that my best trades initiate during London. The best ones initiate during London. The second best ones initiate usually right at the beginning of New York, within the first hour or two. So generally speaking, they're tougher moves to catch, I guess, if you wait longer, because it just runs out of steam, it runs out of time. We did get the breakout here, but as I suggested to you before, this would have definitely not produced a trade for me because it didn't break any significant area like the fib we were looking to break. I did break the trend line but barely poked out. That's a great example of what a fake out usually looks like. The subsequent candle after that did go, let's see here, did go 85 pips just in 1 hour. So you can see that these gold moves, when they happen, they come out with force. This would have been our entry signal candle, by the way. Had I been awake, that would have been an entry signal, and you can see that even though it was a big candle, closing on the close still would have produced another 50 pips within an hour. So that's, I mean, that's 50 pips made in an hour. You can just go about your business. That's what I'm saying. Don't get greedy on the targets, because even though gold does make a lot of distance during the day, catching these chunks of 40 and 50 and 60 and 70 pips is relatively easy in a very short amount of time. As much as I've been struggling finding any sort of decent sized moves in Forex lately, especially, I mean, within an hour, I haven't seen it. So I just want to let you know. So now at this point in the game, I suppose we can keep this trend line, but I'm going to go ahead and I'm going to get rid of the marks, and what we'll do is at the Asian session, at some point when we see that the Asian session getting towards London is starting to establish a range, then we will map it out. Now I can already tell, you can't really see it from this frame. Let me see if I can zoom out a little bit here. Oh, now it's not enough in frame. Okay, magic of editing, there you go. So what I am seeing right now is a trend line that we should probably attempt to map here, and maybe that's not it. We've got good 3-point touch, so I'm going to go ahead and leave that up and go ahead and map out the extremes down at the bottom. And as you can see, it actually makes a pretty nice little channel now. So now we'll look for the bigger break of the channel, because this may establish the Asian range in itself. So we'll just have to see, but we'll go ahead and do another update later on when the Asian range is more firmly established. Catch you guys then. Hey guys, Omar here with your update. Give a quick synopsis of what's been going on since the last video. As I said before, with the establishment of the Asian range, and pretty much look at the Asian range as here, we were able to create a triangle. Remember the trend lines we saw earlier, and an hour after New York opened, we had, or that was right at New York open, we had a little bit of a breakout above the trend line. But as I've told you before, be very careful with weak breakouts, because we did have a couple of things going for the long trade. We had a break above this fib area, a very weak break above the fib area, and a breakout of our little triangle area. But as I've warned you before, weak breakouts are usually fake outs, and anybody that took the long on that breakout got punished immediately, never went into profit, and it dipped right back in to this area, and we may at the end of this hour have a breakout to the downside, which is really our preferred breakout, and in that case, as long as it's a good looking breakout, we will initiate a short trade there. So assuming that you did take the trade long, let's see how far the next candle went. So it went about 45 pips against the position, and is holding against the position right now. I really think we're going to get a short setup here, and finally get a nice trade on the books for our discussion. So I'll check back in about an hour or so, and we'll see what happens. Hey guys, Omar here again with, I guess, the last clip in this video, because it's gotten pretty long, and if you've made it this far, good job. Hopefully you've learned what not to look for in a trade. When we left off last time, this was the candle we were looking at for the breakout. It did break out, but again, it's one of those weak, I like to call them poke outs. which generally, as we saw from the last one, can produce a loss. And if you had taken the long side breakout, which was not really a breakout, it would have ended up probably making you lose. The rule of thumb with gold is that gold is usually no doubt. If it's kind of questionable, then don't take it, because gold, when it breaks out, it really breaks out, and you will be able to see it. Okay, so had I taken the short, I was actually a little tempted to, but I have to follow my own rules. It ended up going about 35 pips, and I know some of you are sitting there thinking, well, I'd be good with 35. In fact, the last two breakouts we looked at, they both produced about 35 pips, and 2 trades in 1 week for a total of 70 pips. You do that every week and you're making a lot of money. The thing is that the type of breakout trading that I've been focusing on is for the bigger moves. So yeah, that's nice to get 30 pips at a time, but on the other side of it, if we're risking 60 pips or 45 pips, we don't really want to be gunning for those little gains, because we do have the opportunity to make big gains. So it's just better to avoid it and not add it to the trades, even though that clearly some of them will create small wins, but we want to try to shoot for the 75, 100 pip wins instead, and a couple of those and you're looking real good. But we haven't had the opportunity this week yet. So now that this Asian range is no longer, in my opinion, valid, I will delete the trend line, and I hope that you can immediately see that we have a bottom end of the range, because it's off camera. It's 1282 and a half. The top end of the range is the fib at 1287.27. We still have this area to worry about, but it's more the creation of the bottom trend line. We really are going to need a strong break below here. We're getting kind of wedged into the upper part of the trend line. Do keep in mind that, remember, gold can reverse, so we can also look for a good strong break to the upside. So we don't just have to trade one side, but we should primarily focus on what the last large move was to give us our main trading bias, and then if we see you'd be stupid not to take this trade on the other side, then we'll take that as well. I like gold because you can trade both sides of it, and that's why I said don't get too wrapped up in the trend. We want to understand what the overall short-term bias is, but we don't necessarily want to put the word trend on it and then get us thinking in only one direction. So I will be back next week, hopefully with an update where I show you a good live trade. So far this week we've had a lot of weakness and a lot of opportunities to see really what we're not looking for in trades. So I hope you've enjoyed this video. Please, fire back your great comments if you like, and I'll catch you guys next week. Okay? Take care. Bye-bye.